see if I can do this. This is my first ever video, so yeah, hopefully it goes smooth. I'm just going to be going over the trade I took yesterday, which was November 8th, the Friday of election week. And yeah, just go over what my bias was, how I entered the trade, what I did right, and what I did wrong. So going into the day, as you can see on this daily time frame here, pretty bullish, like higher highs, higher lows. But then we recently just had a break of structure right here to the downside, which a break of structure just means like a noticeable difference in an uptrend versus a downtrend. Like you can see here, clearly we're trending upwards, hitting that trend line, and then we break below the trend line, and so now we're going downwards. It's pretty simple. So now we're looking for areas to sell, I guess, if that makes sense. Like you're shorting the market. You're going to bet that it's going down now. That's what I'm thinking because we just had that break of structure. Also, we do have on the daily this imbalance right here, which an imbalance is just where price never went back up into, and it's an area where there could be a big reaction out of, so you want to mark those out. Fair value gap is what it's called. So that's all I'm seeing on the daily as of right now. And then we go to the 4 hour, and 4 hours where I usually mark out liquidity, which my liquidity is basically areas where there could be a lot of buy or sell orders that like here, I'll see if I can do an example right here. So like you have this right here and then down. This area right here, that's liquidity because there's a lot of sell orders in this area. As you can see, price pushed down. So usually what happens is price wants to eventually come back up and take out the orders and move further down. You like sweep out all these orders right here, go above, stop people out and all that stuff. So that's basically what liquidity is, if that made any sense, I guess. So I usually mark out the liquidity on the 4 hour and the 1 hour. So there's liquidity right here on the 4 hour. There's also liquidity right here. Okay, some right here. I doubt if price is all the way down here, it's pretty unlikely that it's gonna run up through this fair value gap and hit these highs to push down. Like, it's pretty unlikely. So there's also some liquidity right here, looks like. So yeah, basically that's what I'm seeing for liquidity. I don't know why I didn't make all those white. You usually want to base your trades off liquidity. The big banks are the ones that move the markets, and that's what they do. So trade like the big banks do. So now we go to the 1 hour, and on the 1 hour, there's this fair value gap right here on the 1 hour. So this is another area of interest where price could react. There's also a 1 hour fair value gap inside this daily fair value gap right here. And then, which I guess that daily fair value gap already got hit. But on the hourly, I also mark out hourly liquidity. So there is some hourly liquidity right here. And so yeah, so basically this whole area right here, I think is an area where price is going to have a large reaction to the downside. That's what I've mapped out so far from the day. So yeah, I was bearish going into that. And then hourly right there, we scroll down to the 30 minute. 30 minutes got, whoops. I don't think I was seeing much on the 30 minute. There was this order block right here, which an order block is basically just where a lot of orders are being held because as you can see, like buyers are in control, market's going upwards, market you get a break of structure to the downside, and then so yeah, there's a market structure shift, and when you're like going from going up to going down, something has to happen, especially in markets, something big has to happen, which was right there, going up just like this, and then going down. So clearly right in that area, there's a lot of orders, which means that there's potential for another big reaction to happen. So I marked that out too. And then, I forgot to mark this out, but as well as all that happening, there's also price just came into equilibrium, which equilibrium is like the perfect price for buyers to sell at the price they want and for sellers to buy at the price they want, if that makes sense. Like if you want to buy something for $5 and someone wants to sell something for $5, it's really easy. The exchange is going to happen and you guys are both happy. And that's what happens in this zone in between the 0.5 and after zone. This is just like a Fibonacci retracement, just like called the golden zone, I guess. But yeah, so basically we're waiting for price to come up into this area. It seems like a pretty high interest area. And yeah, so let's go to the 15-minute. I work from top to bottom. It's called top-down analysis. Just helps with your trades overall and all that stuff. So we also have this the 1 hour imbalance is basically a 15-minute imbalance too. So I was and market opens at, let's see here, 9:30 New York time, 7:30 my time. So I got up at like 6 because I had class at 7, which sucks, but so I'm waiting for price to come up to here, push downwards, and yeah, I was gonna take a trade going to the downside, but I figured since I've got class at 7, I might as well take the move going up first and just not trade after that, which I should have been more patient and just waited till after class to trade, but what I didn't, so that's that. Just how it is. And so yeah, so I wake up, it's like 8:20, so what is that, 6:20 here. So I wake up and I see this 5-minute imbalance right here, 5-minute fair value gap right there that just got created. And in a trending market, like if you're in an uptrend, you have a higher high, which is right there, this peak right here, to a lower low, and then to a bigger extension up. The extensions up are always bigger than the extensions down. If the extensions down were bigger than the extensions up, it's a bearish trending market. The market is not trending upwards, right? So you can see that. Oops, let me just... so you can see that, and here's like an example of a downward trending market. The lower extensions are bigger than the higher extensions, just like that, right? So yeah, so basically what I'm thinking is going to happen is you've got this. I'm thinking there's going to be a pullback into this, and then go up further to the range where I think price is going to have that reaction off of. So we just had that 5-minute fair value gap created, and now, I should be waiting for price to come up in there and take shorts, but I didn't because I'm impatient and I need to work on. But yeah, so we've got this little bar replay thing, which is nice. So, just waiting for price to come down. Boom. Oh shit. Wait. Was it the fair value gap I used? That was not the fair value gap. Okay, here we go. Didn't use that fair value gap. Never mind what I just said right there. That fair value gap got crapped on. That's awkward. Anyways, that fair value gap got crapped on. And now this new fair value gap gets made. As you can see, this is the one that I traded off of. Pretty big, strong fair value gap. This one did come down into the order block, not the fair value gap, but yeah. So here's what I took the trade off of. This fair value gap. So we're waiting for price to come down into this one. Boom, just like that, it comes down. I go on to the 1 minute to execute usually. That's not enough of a reaction off of the Fibera for me to execute. So we wait a little more, and then boom, this wick right here, is telling me that price came all the way down to here, but buyers were able to push it up further. So buyers are in control. So I set my trade right here with my stops like right here, and I targeted a 1 to 4, I think, which was pretty greedy of me. I don't know if I should have done that or not, but I definitely shouldn't have done that. I should have been smart about it and targeted. Let me see if I can look over here. Yep, there's the trade. As you can see, I should have targeted this liquidity right here first, and then further after that, and so on. But anyways, so I entered off this trade, off of that candle, and as you can see, and then I went to class. Right there, came about halfway to my stop. If you are an emotional trader and you let fear determine your decisions and your like thinking, if you let emotions take charge of your thinking, you'll never be good at trading. When emotions go up, your intelligence is not very good. Your intelligence goes down. So you just want to be really smart and don't make any like rational decisions, if you know what I mean. Yeah, so didn't take out right there. Stayed in the trade, and price continues to go upwards to the take profit. And I'm in class right now, so I'm not allowed to be looking at my phones. But right now, I would have been up almost there, or I would be up there. This is what a good trader would do, is you'd be watching, you'd move your stop loss right to here, so you physically can't lose any money in the trade. It's risk-free. If price comes down here, you get stopped out for $0. But since I was in class, I didn't do that, and I was too greedy with my take profit. So those are two things I need to work on: is less greed, less emotions in general, more patience. And I just need to have a set time to trade. So yeah, so we'll just let this run out, and you guys can see what happens. Price ends up not going to the take profit, and I end up getting stopped out, I think, right there. So I got stopped out right here for like minus $2,000. It is what it is. Next time I just got to be, more aware, I guess. Can't just be setting my take profits to random spots, if that makes sense. But overall, like, I'm not disappointed. I'm not upset about the trade because because the trade was decent. It went up in the direction I thought it would go, and it did have a reaction off of the area I thought it was going to have a reaction off of. So fundamentally, the trade was there, just like got minor things to work on. And then you can see here, you let price go the rest of the day, and yeah, move downwards just like I had thought it would move downwards somewhere in this area. So, yeah, let me see if I can show you guys the P&L of what happened. So yeah, basically I just got to be more patient in general, wait for the setups I'm willing to take. It was election week, so that, I know, went maybe like Tuesday and Wednesday it messed with the markets, Monday a little, but you can't really blame the markets for what's going on in your head, you know what I'm saying? Just got to take full responsibility for it. Here's the account history. Yeah, minus $3,000. This was from the last couple ones. Oh yeah, also Friday there was like barely any news. There was an FOMC member speaking. FOMC is people who decide the interest rates. This is Forex Factory. You can find out like all the information about what type of news is going to affect the market and stuff like that. Orange folders somewhat do. They just move the market kind of in your favor or not in your favor, whatever. But red folder news, you have no idea what's happening. It's just a giant candlestick. Like, don't want to be trading red folder news. But yeah, it's a really great website if you want to check it out. So yeah, that was a trade I took. Not upset about it. Learned a lot from it. You can always learn stuff from your mistakes. Just what mistakes are human. Just what makes. If you're not making mistakes, then you're doing something wrong. So, yeah, that's all I have for the trade recap.